When you first start out on your trading journey, even if you only use a cryptocurrency trading bot, it can seem overwhelming and most certainly confusing. This video will show you as a complete beginner how to understand basic candlestick charts. I'll explain it in a simple manner, a way that I wish someone had explained it to me when I first started day trading. In future videos, I'll take you through everything you need to properly read charts so you can understand what your trading bot is doing and even give you the ability to confidently make changes or tweaks to your current trading strategy. If you're anything like me, then this is what you thought trading was. Confusing charts with indecipherable lines and strange indicators that don't seem to make any sense. I felt like I stepped into a strange planet with unworldly brilliant minds who worked in front of rows of monitors who held some secret knowledge only obtained by acquiring advanced degrees from top-ranked universities. But let me tell you, that's not the case at all. By the end of this video, you'll be able to understand the gibberish you see on the screen now and how to read basic candlesticks. If we strip away all the indicators from this chart, what we're left with is just a series of candlesticks. This is a 5-minute chart of Bitcoin USDT, or better known as Tether. What you're looking at now is the raw data, or more specifically, we refer to it as the naked price action. This is the most important information for any trader. It tells you exactly what the price is doing at any given period of time. All indicators that we lay on top of this naked price action is just using information from the raw data. It is super important that we understand what the raw data is before we even try to understand what each indicator is trying to tell us. Candles tend to be bullish or bearish. On the left, we have a green candle, which represents a bullish candle. That simply means the price has increased over that given period of time. On the right, we have a red candle, which is bearish, and that simply means the price has decreased over that given period of time. When I'm talking about candles' time periods, what I mean is that each fully formed candle represents the price action of a specific time period. Here you can see I'm logged into TradingView, and up in the top corner we can see the time period of the chart. This chart says 1 minute. That means each candle within this chart represents 1 minute of time. Here I can switch it and make it 3 minutes, meaning each candle represents 3 minutes of time. And you can see that there's many different ones. 1 hour, for example, each candle equals 1 hour of time. Here you have 1 day. This shows us the price action each day. Each candle represents a day. Within the candles themselves, we can gather more information. The rectangular part of any candle is known as the real body. What the real body shows us is a specific price action relating to the opening and the closing price. For the bullish candle, the bottom of the candle body shows the opening price, and the top of the candle body shows the closing price. Notice that the direction is moving up. Bearish candles are reversed, so the top of the body is the opening price, and the bottom of the body is the closing price. Notice that the action is moving down. This is because bearish candles move in a downward decreasing price direction. What you're going to see on charts, more often than simply candles with real bodies, are candles like this with vertical lines stretching from both ends of the real body. These still hold the information of the opening and closing price of the candle. You hear the vertical lines coming off the candles referred to as different things. They're known as the wicks or tails of the candle. Here you can see that they're highlighted by red or green circles. The information added by the wicks or tails is the highest and lowest price of the period. This means that the price would have touched the very top and the very bottom of the wicks. This is invaluable information for a trader, and I'll explain more about candle patterns and qualities in future videos. For now though, let's just stick to the basics. You'll see other types of candles on your charts, and they look like these. As you can see, these candles have little or no real body. They're known as doji candles. What a doji candle is telling you is that the price opened and closed at the same or very near the same price. This is known because there's little or no real body. So although the price may have moved quite significantly during this time period, it closed back on or very near the opening price. So that's the basic foundation of reading candles on a chart. If we reintroduce the chart from earlier, you'll see that all the information present on the chart is simply based around the price action. Here we can see some bullish candles as the market pushes higher as the price increases. Here you can see some bearish candles as the market falls and the price decreases. You can also see that a vast majority of the candles have wicks, and usually they're visible on both ends of the candle. And finally, we can see some doji candles, where the price is opened and closed around the same price or very near the same price. You now have a basic understanding of candlesticks and how they relate to the charts. Don't forget to subscribe so you get notified of future videos in our chart reading series. Let me know what you'd like to learn next in the comments below. I'm Chili from the Crypto Nerds. Thanks for watching.